Hey everyone, welcome to the KE Report, another daily editorial, this time chatting with Dave Erfle. We're going to be focusing on the resource sector, especially the gold stocks and the volatility that we've been talking about in the broad averages. The major markets also hit the precious metals stocks, but it really seems like the precious metal stocks bounce back a lot faster, or at least a lot better than a lot of the other, let's say, mega cap stocks, which arguably still could be in downtrends here. Dave, we were talking off mic about, again, that volatility and how I think everyone's portfolio was hit over the last week and a half, but just in the last under a week, the last really 4 or 5 trading days, the precious metal stocks really ripped higher, especially the good ones. They went through a, I guess, natural quick pullback and then popped much higher. So, what did you see within your portfolio, and what's your takeaway from that action where, again, the stocks were tied to the markets, but they've rebounded so much better than the markets?
Yeah, it was really incredible last week. We talked about the week before. We were talking about how the mining sector had gone down so much so quick, and yet the gold price was, not really hit that hard. And it's as far as investors in this sector are thinking same old, same old. Looks like I gotta sell now and come back later. I mean, it was a really good lesson for not using stop losses, for basically buying and holding and keeping the strength of your convictions and knowing that these gold stocks are still massively undervalued in relation to the gold price. I mean, you had both GDX and GDXJ had sharp moves down. They both tested their 18-week moving averages and then quickly reversed and shot back up. And I know we talked about last week. I said, look, gold stocks have only corrected about a month's worth of gains, and yet the S&P 500 and the Nasdaq have corrected over a year's worth of gains. This is really nothing, and they're still in major uptrends. But the Nasdaq and the S&P 500, they're trading well below their 200-day moving average, and they're in a major correction here. And you look at Bitcoin; it double topped at 108, and it's gone down quite a bit from there. So if you look at what's happened in the gold stocks, it's really not that bad. And then sure enough, this week we had that quick reversal, and it knocked a lot of people out of position. But yeah, I mean, now the switch has obviously been flipped, and you see these stocks continue to go higher. But what was really impressive was this is happening while the stock market is doing what it's doing, right? I mean, I've gotten so many emails from people concerned about, hey, when the stock market gets hit, we know it's going to get hit. It's in a bubble. Gold stocks are going to get a hit too because they're stocks, and everything's going to go down with it. So I should probably just wait until that happens and then get back in. Well, if you did that, then you missed a huge move. And the reason why that didn't happen is because there's really nobody in this sector. If you take a look at the volumes that we've been talking about ad nauseum over the past several months, that the volume in the miners has just been so low, even on the moves up. But well, now this time when we had the false move down lower last week, that created the energy for the snapback move and brought in all that volume for the breakout. So everything looks, all systems go as far as the sector is concerned now, as the miners rapidly, not just the miners but the juniors rapidly catch up to the gold price.
Yeah, Dave, I think this is so interesting of a topic. And it's so interesting the psychology of investors when you see these kind of moves. We saw it happen in the pandemic crash. We saw it in the 2008 great financial crisis. And there's been little flare-ups along the way, like the taper tantrum, et cetera, where people get caught wrong-footed because they see the general markets going down and assume that the gold stocks and silver stocks are stocks that they have to sell off. And they did sell off, but they always respond quicker. They always bounce back quicker. And when you have a strong underlying metals price like we have in gold at all-time highs and silver really holding up there, it can really get people wrong-footed. Look at the move in silver where it dove down to like 27.50 or 27 and some change and then quickly reversed right back. Now it's at 32 again. If people sold that move, they got completely whipsawed out of position. And to assume that everything is going to go down the toilet and you can buy back and buy the dip, the proverbial dip, is sometimes misguided. So how do you keep your subscribers, I guess, focused on the main prize, which is that the margins in these gold stocks and to a lesser extent the silver stocks are still going to be super fat in Q1? And like you're saying, that last week, that's backdated information, but it doesn't look like it's slowing down here in Q2.
Yeah, well, that's what I've been talking about, ad nauseum again over the past several months. Coming into this year, I expected a really good year in the sector because basically what happened at the end of last year again set up the situation for a strong snapback rally coming into 2025. Because last year, look, you had the gold price up 27% as central banks were buying like crazy, but they weren't buying silver, they weren't buying gold stocks. So when we finally had that correction in the gold price after the Trump victory was announced, the gold stocks corrected a lot sharper than the gold price. And by the end of the year, gold was up 27%, and yet the miners were only up 13%. And that set up just a huge opportunity coming into this year. And sure enough, I mean, we take a look at what's happening with the gold stocks now, they're providing that leverage. And even the silver stocks are too, even though the silver price got whacked, like you said, along with the stock market. But it is snapped back now, and these silver stocks are really moving well along with the gold stocks.
So is there a disconnect? Is it silver that's the disconnect here? Or the silver stocks where you see some of the best value? Essentially, are you rotating any of your positions? Do you see a certain subsector of these precious metal stocks that are cheaper that you think it's their time to play catch up?
Yeah, I do. I mean, I've got one position that it's getting really close to my average cost. So I've already told my subscribers I'm going to rotate out of that and put it into something else. And I've been talking to management teams recently to make a decision on which stock on my watch list I'm going to rotate those funds into. And I've decided to take on more risk because if you take a look at what's happening in the sector now, and like I said, the switch being flipped in such a massive way, investors are going to start looking down the food chain because a lot of these things have really taken off and they're starting to become getting close to becoming fair value. So, especially as far as the mining stocks are concerned, the majors, some of these mid tiers, and these royalty companies, they've made these huge moves. These people in the sector they've got all these profits in these majors, so they're going to rotate those profits, some of those profits out of the majors, and they're going to be looking down the food chain to the undervalued and underowned junior stocks. But still, you still have to be picky and get into the right ones because it's still kind of tough to raise capital for some of these companies. But yeah, I mean that's basically what I'm doing right now.
Well, Dave, I want to bring up a specific stock that I know we both follow just as an example and get your thoughts around the psychology of not to selling too soon and seeing these stocks revalue higher. And it's Discovery Silver Corp. It's a company that people will know was a big silver optionality play. The Cordero project, huge, I think a billion silver equivalent when you include the base metals. They found a high grade core. That was always its position in the marketplace. So it was considered the ultimate silver optionality play. They went out and bought the Porcupine mining complex from Newmont, which has some operating gold producing mines, but also some development projects that could come into production. So now they've kind of shifted their focus to becoming a producer, also brought in the gold element. And this stock has been on an absolute tear all year long. I know you've been in it for a long time. I have as well. I was looking at the valuation the last couple of days, and these huge green candles higher over and over again. Talk about a snapback rally. And it's because people are realizing how undervalued it still is. How do you avoid selling too soon? When should you pull the trigger on pulling some profits on a move like this? And how are you looking at something like that just as a case study for the sector?
Yeah, that's a great stock to bring up because it's been a really good case of patience for myself and my subscribers. I mean, we got into this thing before the big move in 2020, and we took a third of our profits off the table way back then, and we've been holding the rest ever since. Well, I know several of my subscribers are as well. And it got really, it got really trying down there at the end of last year, with all the Mexico permit fiasco about open pit permits. Are they going to issue them? And I got a lot of clarity out of that Shine Mom was, if you got an open pit concession, which they do, then you're going to eventually get your permit. And they were in a very strong position financially already. They didn't have to raise money, so all they had to do was just wait. And while they were waiting, and while my subscribers and I were waiting, the stock kept going lower. But we had the strength of our convictions because we'd already taken our investment capital out of the position. So when you've done that, then it gives you a lot more confidence to go ahead and hold it. because you've already taken your original investment off the table and this is just gravy riding. So it's a good thing we did, because they made as soon as they announced that deal, that put the Mexico permitting situation in the backseat, and it put cash flow coming into the company automatically as soon as the deal gets finalized right into the company. And they got such a great deal on the asset. I think it was like $25, $26 an ounce in the ground for a producing asset in one of the best mining jurisdictions on the planet. I mean, this was a fantastic deal, and stock is now beginning to start to catch up to the real true valuation of what kind of deal that they got in this deal. I mean, it's a very, very good project. And like I said, they're now going to be a gold producing company. I think the last thing on the checklist now is they got to change their name. They're not Discovery Silver anymore. They should probably change their name to Discovery Mining.
Well, and that's the thing. That was also, in a way, transformative deal for the company. But we've seen other deals like that happen in the space too. Are there any of the recent M&A transactions or any other sort of news out of companies that has caught your eye that you also think could be, let's say, a game changer for any of the companies?
Oh, absolutely. And I pointed it out to my subscribers because, as you know, I also share my IRA account, my retirement account, with my subscribers. So that's where I have investments in lower risk mining companies, royalty companies. So that portfolio is done exceptionally well. I told my subscribers that I was going to use those profits to get into Endeavor Silver, because they just recently made a transaction with, they're going to be acquiring a producing mine in Peru. You know, all their assets right now are in Mexico. They've got producing assets in Mexico. So once they made this announcement, and when they made the announcement, it was kind of a unfortunate timing for current shareholders, but fortunate timing for someone like myself that was considering a position, because you had the huge drawdown in the mining stocks in like a week's time at the time that the deal was announced. They also had to announce a $48 million bought deal private placement to finance the purchase. That caused more dilution, and it caused more downdraft in the stock. So the stock was trading around $5 a share just before the deal was announced, and it ran up to $5 a share because they had this fantastic Q2. And so the stock was trading around $5, and then they announced this deal. The stock got hit with dilution, that got hit even more. So the stock was down 40% in like 3 weeks. So I told my subscribers, hey, this is an opportunity. I think this fishing line should be bought. This is what I'm going to do. I'm going to add an 8% position in my retirement account. This is going to really raise the bar for this company, because they'll become a mid-tier producer, and they've already in line for a re-rate, because their Terranera project in Mexico is about to come online for commercial production, initial production, and then it'll be in commercial production expected to start in Q3. And it's going to be the largest mine in their portfolio, and it'll also bring down the average costs for all their other projects. So at the time I expect the silver price to continue higher, their all-in sustaining costs for their entire portfolio is going to be going down. And they'll also have more production coming out of Peru. And now they're a mid-tier silver producer. And I think they're very undervalued. So that was it turned out to be a lucky move, because as soon as I purchased it, that's when the sector turned around, and the stock did a major V bottom, and we were lucky to get in early.
Yeah, Dave, I'm glad you brought up Endeavor Silver for multiple reasons because, yes, they were making an acquisition, which is another way to grow and take advantage of the higher metals prices. They're growing their production profile up to a mid-tier where they get maybe a better metric, better rating. They're lowering their costs and upping their production with Terranera coming into production later this year. But it also is a great example of how people are backward looking instead of forward looking in their investing. And this is the question I'd like to ask you about. I saw an interview just yesterday where somebody was dogging on Endeavor Silver and saying, they're such a high cost operator. It's like, but if you look at their deck and if you look at their projected cost for Terranera, it's negative cash cost because the gold carries the silver. And it's something around $2 an ounce silver equivalent because of that gold kicker that's in there. And that brings their consolidated costs down so much, but people aren't used to looking forwards. They're used to looking at what happened last quarter. So maybe you speak to that as far as looking ahead versus looking backwards in these valuations.
Yeah, this sector's all about looking ahead, Chad. You have to look ahead. You can't look at, okay, this stock has been a dog for so long. They're high cost. Why would I want to invest in it? Well, that's exactly why you would want to invest in it if they're addressing that issue and they're growing. And it's a company like Endeavor, like I said, they're about to have their largest mine come online for the first time and come into commercial production in Q3, and it's such a low cost mine, it's going to bring in their average cost down on everything. And the stock is cheap because of that, because of the backwards looking investors. I mean, you have to look ahead, and you have to buy fishing lines and sell rhino horns in this sector, not the other way around. My subscribers and I took advantage of a fishing line sell off for the reasons why it fishing lined. You have to look into it. And is it an opportunity, or is it a danger sign that this stock is going to be a lot lower for a lot longer? And this provided an opportunity.
How do you limit risk on these mine builds? I get the aspect of looking ahead, but in all fairness, you look at these guys' decks and even economics around projects, and you think, well, this is going to change the whole company. They just need to get this thing built, and they're getting so close to getting it built. However, we have seen those failures, really, where as close as they could be, even when mines are operational, they don't produce what they said they would. They don't perform how the market expected or how the company outlined they would, and we've seen stocks fall in their face. So how do you avoid those pitfalls?
Yeah, it's really difficult. I mean, because you have to watch out for dilution, because in juniors, it's always about dilution, managing your dilution, especially, when the sector is in the process of forming an accumulative bottom. You have to accumulate the right shares, because if you don't accumulate the right shares before the sector takes off, then you're ending up chasing something. That's the last thing you want to do, is chase stocks in this sector. But to avoid that, you have to get on the phone with management and ask them the tough questions, right? How are they going to finance this mine? How much debt and how much equity are they going to use? Are they going to stream to limit some of the equity dilution? Are they going to sell a royalty? I just got off a webcast with a company and asked all those questions. And this is what you have to find out, because it's all about dilution. It's all about the upside. The company that I'm about to sell, I mean, a couple of years ago, the future was bright for the company. And what happened was the cost associated with bringing a mine back into production was a lot more than they expected. And since the market was the junior bear market was ongoing, they had to continue to dilute at lower prices. Not only that, they had to offer full warrants with their dilution. That limits the upside even more. So by the time the mine is coming online now, their share structure, it's 3 times higher than I expected, and it's got all these warrants now. So fortunately for me, though, it's coming back to what I paid for it. So I don't feel bad. Okay, it was a missed opportunity, but at least my subscribers and I didn't lose money. So we can rotate that capital into something else that's got a lot more upside, because that's the big rule of thumb for me, right? I'm not going to get into a company unless I see at least 3 times upside within the next couple of years.
Well, Dave, doesn't that even highlight the movement we've seen from investors backing companies that are buying production that's already existing, so it doesn't have as many risks versus trying to build production? And what I mean by that is what we just talked about, Discovery Silver. They bought an existing mining complex. Endeavor, buying an existing mine in Peru. You look at Integra, buying an existing mine with Florida Canyon. Heliostar, buying existing mines from the ex-Argonaut rollout. Even Alamos Gold waiting to buy Argonaut until they got their mine built. Isn't the message from the mining sector the last 2 years it's better to buy mines that are running than to try to build mines?
Well, I don't know if it's better. It might be better for them in their particular situation. It all depends on what situation you're in, right? I mean, if you're in a situation and you've got this, let's take a look at someone like Skeena Gold and Silver, right? They've got this fantastic asset that they've been de-risking. As by the way, it's another company that's in my top 10 that my subscribers and I hold. And this is a company that they acquired a brownfields asset that was formerly one of the highest grade mines in the world, and they've de-risked it now to where they're fully financed before they even get their environmental permit, which is unheard of. and they've also limited dilution to where their share structure is still super tight, and the stock is really taking off now because of that. So in their situation, it made sense to go ahead and de-risk the project that they already had and not try to go out and buy a producing asset.
Hey, it also helps when the precious metals price is skyrocketing higher too. You can buy these mines that weren't making money or struggling to make money, and now they're economic. So the timing is so important for these companies. Chad had many good examples there of companies that really, whether it's through luck or they somehow knew the market was going the direction it was, they timed these acquisitions perfectly and took advantage of companies that were struggling. I don't know if companies now that are mining, if they're having that much trouble keeping the lights on that they were a year or two ago. So we'll need to keep our eyes open for more of these deals that really can change these juniors into a true re-rating, into mid-tier producers with cash flow. But right now, yes, if you're mining in this market, especially gold, you're doing very well, and your share price, most likely, I think 99% of them have done very well as well. Dave, great chatting with you. As always, again, Dave is the founder and editor of the Junior Miner Junky. Click that link in the show notes to find out more about Dave's newsletter. Dave, great chatting with you today. Thanks for your time.
Thanks, guys. Always a pleasure.